Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for November 14th, 2022. We are recording this at a special 10 a.m. Eastern Time. And this is episode number 366, and it is also kicking off the Friendsgiving 2022 conference, which is Synergy Traders event number 42. And hey, Dan, I see you're there now. So we have a awesome week planned, and let's just stop your video here. We have 40 presentations scheduled for this week, and so we're going to kick off the event with this crowd forecast news episode, and then have 9 more presentations today, and then 10 presentations each tomorrow, Wednesday, and Thursday. So today I've arranged for Dan Passarelli and Harry Boxer to be here as our guests for this episode, and the option professor is moderating again. So I'm going to go ahead and turn it over to him.
Okay. Well, we had a lot of action last week, and certainly we probably got a lot more coming up this week as well. So we got a big week of guests coming on the shows. And today we have 2 outstanding guys, very well respected in the industry here. So let's get started by a quick introduction, then we'll get into the markets. Dan, can you give a little background on yourself and what's going on at your company?
Yeah, sure. Hi, and hey, thanks for having me. So my name's Dan Passarelli, and I've been doing this for about 30 years. I started in the options industry. And here at Market Taker Mentoring, we are a leader in option trader education, and we're working on lots and lots of really interesting things, new systems to make trading simpler and better, more efficient for all of our student traders, and lots of really exciting stuff. And I'm really excited to be here to chat.
Sounds great. And we'll get into some of the tactics and things that you're kind of focused on as we get into the broadcast later on. Harry Boxer, obviously a veteran of the markets, and always has a lot of ideas out there that are very interesting. So Harry, a little background on yourself, and again, what's going on at your company?
Well, the TechTrader.com is our website. We've been around. I was actually one of the first live trading rooms ever set up on the internet back in 2001. And so I've been around for 21 years doing that, but I've been 10-year, prior to that, 10-year experience in Wall Street. And quite frankly, I've been trading since I'm a teenager, and I'm trading actively. And I've been, doing this for 55, 60 years now, long time. I have a large group of traders in my room. We do day trading and swing trading. I'm a technical analyst. I believe in 1, 5, 10, 15-minute charts. I look for intraday patterns that set up excellent day trades. Sometimes, multiple double-digit type trades. Most of the time, actually, we get some pretty good trades out of our patterns, no matter what the market's doing. One of the things I pride myself on is finding the stocks that are moving, no matter which way they're moving, up or down. Because to me, the pattern's set up the same way, both up and down. So at the TechTrader.com, if you come into the room, spend a couple of weeks with me for free, no credit card, I think you'll find an interesting place for profitable ideas, and not only for day trades, but if you can't day trade and you want to swing trade, and you want to trade because you're not, you're working, or you're not able to sit there and watch the market all day, we have some outstanding performances from some of our swing trades over the last year or two as well. So that's my spiel, and let's get started.
And at the end of the broadcast, we're going to give both you guys a little time to expand on some of the stuff that you're doing for people, and when they contact you, exactly how they could benefit. So we'll save a little space at the end for that. Let's get started with our normal question of the Monday morning. The market on the S&P opened at 39.77 basis the SPX, which is the cash. And from 39.77, what do we think the market will do between now and Friday? And what's your confidence level? And we'll start out with Dan. What do you think?
Well, this is an interesting week because we've got PPI coming out. We're going to be watching for any economic data to get some visibility on what the Fed might do next time around, because that has not really been a big mystery the past 3-4 times. But this time we might get some interesting surprises. There's a little bit of a I don't know if I want to say disagreement, but just there's some different ways of thinking as to whether we might have a 50 or a 75 basis point raise in the early December meeting. It's just like, a little over 2 weeks away here. So there's going to be a little bit of wait and see. I think what comes out with the PPI number is one of those areas of visibility that's going to guide us some. We had a great deal of volatility last week, and so far starting out Monday morning, not super volatile, but I think some of those knee-jerk reactions could continue, especially if we get some some inflation news coming out or something out of the Thursday unemployment number. So I guess my prediction, if you will, is really one of continued volatility rather than direction.
So you think it could be choppy?
Yes, I think it could be choppy. I think it could be,
But if somebody was going to say to you, you had to make a choice, then you could put your conviction level at 10% if you'd like. But if somebody said to you on Friday, would we be higher or lower than 39.77? If choppy means obviously your confidence level will be pretty low because it could be either way, right?
Yeah, I mean,
but if you had to take a guess, 39.77, you think would be up or down from that number?
I think we have a reasonably good likelihood of being up. I think, gun to my head, I'm going to say up, but
But your confidence level is probably below 50-50 simply because of the choppy nature you're expecting.
Exactly. Yeah.
I'm with you all the way. All right. And Harry, what's your call here? 39.77, up, down, sideways, and how confident?
I'm bullish, and I'll tell you why. First of all, you remember Joe Granville from years and years ago?
Sure.
Joe Granville's favorite expression was what? The market climbs a wall of worry. The market will always discount the future by 6 to 9 months in advance. It does it. It's done it every time. This bear, most people don't even realize we've been in a bear market for 1 year. If you look at the high in the S&P and the NDX was somewhere between November and December of last year. I think the actual high in the S&P may have been first week of January. But the point being, we've been down for 10, 11 months. And if you take a look at the average bear market, it's 9 months to 13 months. So for me, I look at 5 waves on an LA wave number. I wish I could share my, can I share my screen with you?
Yeah, sure. Please do.
I want to show you something.
You should be able to now.
Hold on. One sec.
You got to hit the word share, though.
No, I got it.
Oh.
Okay. Do you see my
Now we do. Yep, we're up there now.
Okay. In December, this is the S&P. We hit our all-time high at 48 and change.
Yep.
1, 2, 3, 4, 5 wave, a perfect 5-wave LA wave drop, followed by a massive reversal day.
Yep.
Scroll in. Look at that bar.
Yep.
We went from 34.91 to 36.85. The S&P went up 195 points and closed at the upper end of the range. Back then filled for a week and popped again. Got to the moving averages, pulled back and tested and created a new trend line. Basically, we're in an uptrend. Where are we now? At the top of the channel. Can we pull back and consolidate? Of course. But we also may do this. Look at the major declining tops line. We might get up towards lateral resistance from this peak, the declining tops line there, and the top of the channel, which is a juxtaposition around 4,100. Now, one of my esteemed colleagues, Avi Gilbert from LA Wave Trader, who is the best LA Wave guy I know, said the same thing I'm saying. We're going to 4,100, but we may come down first.
Yeah.
And at that point, if we get to 4,100, we're looking at 43 and a test of this key lateral resistance level overhead. If we fail there, there's a possibility we could get one more leg down, either double bottom or even make a lower low at some point. But I think this is an important bottom for several reasons, but I'm not going to get into them now. We don't have a lot of time specifically, but I will tell you that technically I'm a bull. And I'll tell you another reason why I'm a bull. Look at the charts. And I'm talking not dozens, hundreds of charts that are showing this kind of reversal patterns, coming off lows, coming off multiple long-term declines and 5-wave declines, and reversing and going back up and above the moving averages. See these 3 little dotted lines, the blue,
Yeah.
the white, and the green? This is the 10, 21, and 50-day moving average. The S&P blew through it with that breakaway gap on Wednesday. Wednesday was the biggest day, I think, of the last couple of months for this market, in my opinion. But you
Now,
can
Harry,
see
I got a
it's-
quick question for you.
Yeah.
You know, there's a lot of gaps out there. In fact, gaps is the big word, I think. With regards to the S&P, is it possible we could pull back towards that 3830, 3850 number?
Down here?
Yeah, so, you know, somewhere like that before we take off?
Of course, because it's a 1, 2, 3. So we get wave 4 and then 5.
I got you.
The 4th wave could come down to there,
Right, there you go.
there.
That's what I thought would be a good entry for people who missed the boat. Maybe if you get a
but let
if
me
you get a
tell- but-
3850, 3875 print, you could start going in the water a little bit.
That's true. And the
Because a
other
lot of
thing-
people are a little hesitant to buy something that's already up, you know,
but when
400, 500 points off the bottom, right?
except that the beginning of every major intermediate move began with a thrust, and the thrust not only in the oscillators but in all of the indicators you see, it goes quickly overbought and stays overbought for several weeks, because in the beginning of every move you see 8, 10, 15, 20 to 1 ratios of advanced declines and up down volume. That's what the McClellan oscillator, for example, is based on. Now, when that market continues to pull back or even go higher, those ratios are usually 2 or 3 to 1, maybe 4 to 1, but they're not going to be 8, 10, 12 to 1 anymore. So the actual oscillator will come down while the market's moving up. It's not a worry for me. It depends on how it comes down. But for me, I'm extremely bullish here. I just think that
The other thing
nobody
is
I
that
know
we're
is
going
bullish.
into another thing, Harry, where there's a big gap between Fed meetings. And if you recall, in the July meeting, we had the gap because of Jackson Hole, and they didn't meet again until September. And that window of opportunity, the market went up like up to 4350. Here we have a meeting on the 14th of December, and then we don't get together again with the Fed until almost February 1st. And so if they only go 0.5% and you got a decent print on the CPI, that window of forget about the Fed for 6 weeks could also give you that 4,300 number pretty easily.
Now, if I had a chance to show you some of my charts, and I don't really need to get into them, but let me just say in summary that the vast majority of charts look like this. They've broken out, and some of them look way better than that. They're just they're trending in a big uptrend. So for me, I'm very happy about what I'm seeing technically, and that's the most important thing. I'm not a fundamentalist. It's not like I don't pay attention to fundamentals.
Yeah, no, that's not what you're going to trade off of, but you certainly don't put the earplugs in when people say certain things, right?
Yeah, as a matter of fact, the reason I knew we were bottoming there, every hedge fund and institution that I talked to that's a client of mine or just a friend of mine, they were all bearish and going, and they were in cash, and institutions and had the highest cash position. I think, and I don't remember if it's 14 years or 40 years, doesn't matter. They're at multi-year highs in institutional cash. Right now, you're seeing FOMO, the fear of missing out, because I think a lot of institutions have missed the boat here, and they're going to pile on board on every pullback, my opinion. We'll see.
That's what it looks like. Dan, as far as the options are concerned, when we got down to 3,500 on the S&P, VIX was up at 35. And all the moving averages, like Harry's showing, were way above the market. And that's generally a setup for that reversion rally, don't you think?
Yeah, we tend to see that sort of negative correlation between the equity market and the implied volatility of that equity market. And now, well, it's a little bit interesting that both the VIX and, well, at this very second, spiders are up at the same time, though we tend to see a little bit of that on Mondays. But yeah, I mean, just kind of going off some of what Harry was talking about, I tend to look more at the longer term moving averages. Not that my trades are very long term. A lot of them are swing trades or short-term trades, maybe going out to 2 weeks tops, but I still look at things like the 50 and 200-day moving average. So having busted through the 50-day moving average 4 sessions ago, and if Harry ends up being right and we end up hitting 4,100 in the S&P 500, the 200-day moving average is at 406.94 right now, and we could see some follow through there, but I have the same concern that you mentioned, is just that we've got that gap that showed up, between 3 and 5 sessions ago. And man, we just tend to see those get filled a lot.
Yeah, it could happen by the end of the week if some of that news turns the other way a little bit.
Hey, guys,
Last time we had a
can-
gap, I noticed it took about a week for it to fill.
I'd like to jump in there with a comment.
Yeah.
I just wanted to know that I have studied gaps for 45 years.
Yeah, what do you think?
I can tell you right now, gaps don't necessarily get filled for weeks or months later.
No, exactly right. Yeah.
When you see a breakaway move like that, it's usually a breakaway gap and it doesn't get filled immediately. If it's
Right.
really strong, if the volume's strong, if it's a big day technically with good advanced declines and up down volume, that gap may not be filled for a month or two later. So
Yeah,
I'm
and
not
that
worried.
might fit into your theme of we're going to go up maybe as high as 4,300. And then it's possible we go down and either test or take out the lows, which would also be coinciding with filling that gap between
Absolutely.
3750 and 3850. So I
Agreed,
think
but-
what you're saying there is that, don't put the light on outside for the gap to come home soon, but the
Yeah,
gap
because
will be
look,
filled at some point.
It may very well be filled in January. The market could do a year-end rally into early January like it does a lot. And
Yeah.
by January 5th to 10th, in that time frame, it's amazing how often the market will show a Santa Claus rally, peak out early January, and then roll over into February. And then that gap may be filled. But for me, an
Yeah.
opportunity lost because I'm seeing 30, 40, 50% gains off the lows on a lot of these stocks, particularly the lower price stocks that are reversed with big volume. Some of the stocks that got bashed. I'm amazed how many 90% losses there are on Wall Street. It's amazing.
Yeah, and some of the sectors that were under pressure have turned around, like those biotechs that you like to look at sometimes.
That is absolutely correct. I follow biotech. If you look at the XBI,
Right. No, I mean, I noticed there was a good turn there. Yeah.
but not only that, but take a look at where the XBI was with everything else. I want to point something out to you. The financials made a lower low and then rallied, right?
Yeah.
The semiconductors made a lower low and then rallied. But the biotechs never made a lower low. They just platformed and now they're breaking out.
Yeah.
Relative strength in biotechs, pay attention because this market wants to take the biotechs as leaders, in my opinion.
Yeah, it could be a rising tide lifts all boats in biotech too.
Yeah.
Yeah. Dan, is there any other technical or fundamental things that you're kind of looking at? And do you have any kind of a screen you'd want to share with us at all, or?
No, I mean, I think what Harry's showing tells a good part of the story here, but
Okay.
I think there is one interesting thing to talk about here. This idea of gaps can get filled weeks or months later. And as far as the prospect of getting out of a bear market, and finally turning around here. So what I think with the VIX at 2320 right now, this is going to end up being, maybe not today, but if we get a little bit of that short-term rally, this is going to be an excellent opportunity for the long-term investors who are listening, which is probably somewhere close to 100% of people listening. They may also be traders, but they invest, right? This is going to be an excellent opportunity to start working your way into puts to hedge your long-term portfolio. I'm not saying taking bearish positions necessarily right now, but I'm talking longer-term puts, because if and when that gap does get filled, and if and when that pullback comes, which could be tomorrow, could be, maybe more likely a week or two from now or 3, you want to be positioned for it. And if you missed a decent hedging opportunity early on through this bear market, you might get a second chance.
Yeah. And some of the just married put type stuff, or would you do anything like the collar, sell the call, buy the put?
There could be some opportunities to sell calls in order to finance those puts, but I would be looking for some pretty strong resistance levels. For example, in the S&P 500 SPX, I mean, we're looking at like 415. We're looking at 417.5.
Or on that SPX 4100 or 4300, those would be the opportune neighborhoods to really start looking at the calls.
Oh yeah, especially, I mean, if we get an opportunity to sell calls at a decent level at 4,300, that's collar city.
Yeah. Because then at least you have a floor underneath your equity, because, as good as things can look, they can go the other way too.
Yep.
Yeah. Harry, we were talking a little bit about biotech, but you want to give a few sectors that you're kind of looking at that might get, well, all the sectors are going up nowadays, but with regards to ones that you kind of are focused on, where's the big action as far as you can see?
Well, take a look at the semiconductors. Obviously, they've had a massive drop, but they were the leaders going through this entire bull market. And if you take a look at a stock, which a quality company like NVIDIA, it's actually had a 1, 2, 3, 4, 5 wave, long-term Elliott wave decline that saw NVIDIA go from 346 to 108. That's a huge percent move. I think it's dropped 70% or something, 65%, whatever it is. And now, declining top line broken, lateral price resistance broken, moving averages have crossed over and turned around. And this is a little bit short-term overbought, but momentum is fabulous. NVIDIA is a stock I would follow as a market measure, and AMD, which is, introduced a new chip and everybody's excited about it. The difference between these two, this has had a massive move down too, from 164 down to 54. And you can see it's back to 74, but it's nowhere near, even though it's had a short-term breakout, it's nowhere near the declining top line yet. Well, NVIDIA has already broken out. So you got to go with relative strength. If you're looking at a group, that's the stock I'd be focusing on. But I also like some of the ETFs in that group, like SOXL. That again, this is why I think the market could pull back in here, because a lot of these indices have come up to the declining top lines. And it's rare for them to just bottom and go right through them without some sort of pullback consolidation. So even if it goes sideways for 5-6 days and forms a flag, that'd be great. It may enough to maybe create enough of a consolidation for the market to pause, rest, and then digest the gains and then move higher. And ultimately get the SOX, I think, up to about SOXL up to 23 from where it is now 13. That's a big move.
The two stimulants from last week also are going the other way, which is the dollar and interest rates. So there's been a little bit of a profit taking on those two trades from last week, which obviously were very huge short-term winners for people. Short dollar.
By the way, in my room, we trade the triple bull biotech LABU.
Okay.
Note that the market kept going lower, 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 and this held, and built a nice 2-month base. And now it's right up against resistance. If you watch LABU, it's every single day, it goes down in the morning and bounces in the afternoon. My traders have made a lot of wonderful day trades on this almost daily. It's amazing. And if it should get over, say, 8.25, 822, 24, which is resistance, it can go vertically to 10, maybe 13, where the old high was. A lot depends on how strong the market rally is, if there is one. But for me, that's a nice setup.
Okay, the whole planet is hyped up on the oil shares this year, and rightfully so. These guys are making ridiculous ridiculous profits, and their stocks have done well. Let's go over the oil. I mean, is it a deal where they just sucked everybody in and they're going to tank it, or do you think it really has a big upside?
Well, for me, I was looking at this thinking, this is the left shoulder ahead and a weak right shoulder, and this thing could tank. It broke the neckline here for a day or two and rallied right back up again, but it's forming a rising wedge. If it doesn't break out above 81, this is the USO, then it could roll over and we could be back down to 59.60. I don't know. And even my buddy Avi, who's an excellent Elliott wave analyst, says oil is neutral. I can't give you my take on it because I can't tell whether they're about to tank or break out to the upside.
It really is that. And he's 100% accurate. This thing could bust either way. And, with participation so high, you would think that it might bust to the downside, because when participation gets that high, it seems like it might be fully loaded. But
well, when you look at the gush, which we also trade in my room a lot, there's a long-term trend here. It came down, broke, kissed back, double bottom, then broke out again. So to me, look where we are on gush. We get above 209, this thing can go back to the old highs again. But if it rolls over here and stops out, I told everybody stop on a 175.
Yeah, this thing actually is a bit more interesting to me, because it's exploration and production. And again, with more of a red wave in there than there was before, maybe they can get some of this exploration stuff going. Schlumberger, Halliburton, two beneficiaries of that kind of stuff.
Yeah, I like those two, by the way. One of them is the swing trade in my room, but this is a double bull ETF. Gosh, so it has a little bit more energy than the UCO or the USO, both of which are nowhere near their highs. So we'll see.
Now, natural gas, went way underneath 650, which I thought was a real negative for it. What do you think of natural gas? And this RRC is one that I've had a lot of success with.
Well, I like trading the nat gas ETF Boyle, and there's another one, UNG, and both of them are showing bearish patterns. They're in downtrends,
As I was going to say.
but we've had, and this is an island reversal, a negative one. So I don't know what, unless they take this back above that resistance zone where the 50-day moving average is declining.
Yeah.
That's key resistance, 23 for UNG. And on Boyle, it's up here near 53. We're only at 41. So it could be a lot of
Again, the whole world is betting on this cold winter and natural gas prices going through the roof. And that doesn't seem to be what the natural gas prices are saying right now. What does
Exactly.
RRC look like to you? That's kind of a decent.
You mean range resources?
Yeah, this is a oil and gas, but it's a lot on natural gas.
Same thing here. This is a left shoulder, head right shoulder. It came down to the neckline, but didn't break. And now it's formed this pattern. So
Yeah.
the two things you want to watch for, can it break out over that line above, say, this little spike high it had recently, above 30, 30 and a quarter, it could go right back to the highs, or it fails here. And if it rolls over, probably creates something like that and is vulnerable to $20. So
Yeah, if what you're saying about the natural gas is that it's going to go back in the tank, this will go back in the tank as well. But it has held up pretty well considering the natural gas has backed off.
very well. Not only that, but LNG, liquid natural gas.
Yeah, that's a little bigger issue. Yeah. I think it's like 100. I used to like that one in the 70s and 80s.
Yep. You can see the multiple tops up here having a tough time getting through 180.
Yeah.
Easy stop right there under that 145.50, 148.
Hey, Dan, do you have a couple of stocks or some things that you're looking at on this?
I do, as a matter of fact. Hey, Harry, would you mind going back to UNG for a minute? I think it's just easier if we share one screen here.
There's on.
All right, there we go.
Very
Okay.
volatile in here.
Yeah. So, there's a couple of things. One, I want to reiterate the point that Harry made about the bearish island reversal. These are actually really, really strong patterns that you see a lot of follow through back to the downside. And not just the 23 level bouncing off, but it bounced off that 200-day moving average. And again, I bring that up not because I put on trades for 200 days, but because it is a very, very strong pivot point above and beyond. You know, I look at that as a stronger pivot point than any short-term level that we can possibly have. Now, it did try and test, and I know we don't have that on the screen here, but it did try and test the 200-day moving average on Friday's session, or excuse me, the 20-day moving average on Friday's session, which typically, if the 20-day moving average is one of the strongest momentum areas that I know, and we're back above it today. Further, two other points on there. Fundamentally, you know, this ends up being a very, very weather-driven product, right? And the stuff going on in Ukraine and Russia and all that. I also rely very much more on technical analysis than fundamental analysis, but I think we have to defer a little bit to potential fundamentals that can occur here above and beyond what we see on the charts. Further, one more, I think it's interesting looking at UNG because it's an ETF. And so we get that sort of benefit of being able to see a bigger picture rather than just one company. The implied volatility is just massively high across the board on that. And so, you know, this becomes, because we do have some support showing up here on this chart, this ends up being a really interesting opportunity for put selling opportunities for people who just want to get long it, or for shorter term traders to look at selling some put spreads to try and eke out some quick profits by selling just massively overpriced options.
All right. Sounds good. You know, one other thing, when the dollar breaks, obviously a number of things really benefit. So I was going to, Harry, go over with you a little bit on these metals. I've really got a nice big bounce in things that I've owned, like AG, which is a silver stock, and GFI, Goldfields. And so what are we seeing here? I mean,
Well,
time to
let
take
me-
something off the table, or is this thing really going to go?
well, two things. I was a precious metals bear since this spike top here on AG, and a lot of gold and silver stocks that spike, were basically, had big run-ups, and then 1, 2, 3, 4, 5 waves down, then a bounce, and then another pullback. This is essentially a 1, 2, 3, 4 long term. Sometimes a 3-wave decline can create a much bigger move, but I'm skeptical. But I see every little stock that I follow that's gold stock, not necessarily little. Barrick, AU, I like a lot. Look at that breakout. Look at that run up.
Yeah.
Almost vertical, and it's right near a gap and near price resistance. So I suspect they pull back down there a little bit, short term overbought. A lot of the golds, even the big ones like Royal Gold, vertical pops, breakouts out of base patterns. Newmont.
How about GFI? You like GFI, Goldfields?
I mean, same thing like AU, a vertical movement, big volume, but
Yeah.
short term extended. Now,
Those are the two that I've been running.
I always think my philosophy for all the years I've been doing this is the stronger the surge, the more likely it is to extend. Everyone has just the opposite mentality. Sell. I want to sell it because it's overbought. Well, overbought is good at the beginning of a move because usually most stocks that thrust with volume like that, you want to look for the first pullback and enter it, because I think at some point, even though it might take a month or two of consolidation, it's going to pop into the 15, 16, 18 range.
Yeah, the horse is out of the barn.
That's what I say.
And a couple of other industrials are doing pretty good. What about X, which is US Steel? Or any ones you want to throw?
US Steel's okay, but when you look across this level, you'll see multiple tops. So this is going to be resistance at 26.5. If it punches,
Which is not that far away. Yeah.
Right, but then it may get up there and pull back, or it may blow through it and then pull back. That's what I would look for a swing trade. Normally, when I see moves like that, fine, like Alcoa, and same thing in aluminum, broke its declining topside with a thrust and volume, then pulled back. But even today, it's up again. I just keep an eye on these stocks. How
about that Cleveland Cliffs, CLF?
Not as strong because take a look. It's still in what I consider a downtrend here.
Yeah, no, it's weaker.
Yeah, it's weaker. And then US Steel, for example, a little bit better thrust, but neither of these have really had with significant breakouts, short term perhaps. I'm seeing many better trades in other areas.
How about Freeport, FCX? You think FCX?
I was just going to bring it up. This is the Tech Trader swing. And when it broke out a week ago, right there, I put a swing on it, back to fill for 3 days, and it's popping. My target's 43 and 48, 49 on move up, but it may give you a pullback. And if it does give you a pullback, now that it's broken out of the base, taken out the 1, 2, 3, 4 truncated 5th wave base pattern development here, that was a breakout. I think the stock can advance. There's a double top right there. I would say my intermediate target's 43.
So again, that's all part of the dollar turn. Another part of the dollar turn would be international. Can you put up EEM, which is your emerging markets? I thought that would fly. It looks like it's gonna.
Take a look where it is. There's
But it's running into headwinds, huh?
There's so many markets that look like this. Even I'll do it one more time. The NDX hasn't even gotten there, but the S&P is there, approaching it as well. You look at the transportation index, right to the declining top sign here. It's interesting. 1, 2, 3, 4, 5 waves down. Transportation index is stronger than the Dow and the NDX, which is Dow theory positive. That's another thing I forgot to mention. Transportation stocks are outpacing the industrials, and that's a positive on a long-term basis in terms of Dow theory forecasts.
Okay, so that's I believe that 100%. Transports you think are looking pretty strong.
It's an indication of the economy, and what this is saying.
But it also is hitting a little resistance here.
Right. So you look for either a pop of 15.5 up in this resistance zone, and then a pullback, or a pullback here and an entry opportunity near 13.78.
Yeah, that would be good. With regards to like some of these other ones, like EWU is Europe. Let's just go around the globe real quick. Yeah, you see when the dollar peaks, that these stuff go a little bit, right?
To me, it's right there again. You're seeing a lot of these indices and ETFs and or stocks groups, whether they be commodity or whatever, they've all come off steep lows. again, even this one, 1, 2, 3, 4, 5 waves down.
Yeah.
And now rally back. So, but it's at resistance. Even if you look at this little peak it had here near the moving average, where it failed near the 50, we're right there. This is double resistance here. So, the ideal scenario is the market pauses for a while. If it doesn't get too much of a pullback, if it does more like a flag or maybe a falling wedge or something like that, and it does it with lower volume, and you don't see much, and it's an orderly retrace.
Yeah.
That's where I think that's where the market's set up for a monster move year-end rally.
And let's look at a couple of Latin Americas. EWW is Mexico and EWZ is Brazil. I think Mexico looks like they're going to be on a roll for a while. Here's this is Brazil, and they're not looking that great.
Wow, that is amazing. I never noticed.
But
that.
Mexico, I'm telling you, I've been real keen on Mexico, and it's had a big move, but boy, it's a strong looking thing, right?
Yeah, interesting. There's a Mexican silver company. Yeah, not really doing much. It's called Gato Silver. That I follow from time to time. So I mean, but when it comes to silver, I follow AGQ, and I want to point this out too. Declining top line broken here, but it reached the double top and backed off and retested the low. Then it broke out and it broke through the declining top line, and it's sitting there. Today it's up again a couple %. So I think silver turned the corner. And if you look at the NUGT, you'll see that the large declining top line has been broken. Lateral price resistance is broken. It's at resistance, but gold and silver look like they turn around. If you look at the ETF for the groups,
they've gone from sell every rally, you think, to buy every dip.
That's exactly what I'm thinking.
Yeah, that's about, and of course it coincides with a 115 print as the top in the dollar. And again, these things have been beat up. So, if you wanted to sell this stuff, you probably should have already done it, right?
Yep.
So on the order flow. Dan, do you have any feelings on these metals or any other sector that you're kind of more keen on than others?
Yeah, just kind of going back to the, let's take a look at AU, for example. So, that one ends up being a pretty interesting one because we see that gap above the 200-day moving average. But kind of more importantly is that some of these big thrusting candles that we've seen over the past week or so, they created a really high historical volatility, which ends up leading the options to being slightly underpriced. So what that could mean, like it's always tough to call, like we've talked about, hey, look, there's a gap, there's a couple gaps to be filled there, right? So there's some bearish opportunity there, but we busted through the 200-day moving average that now becomes support. So there's some upside opportunity there. So when the options are underpriced like this, I start looking at situations where we could start looking at some straddles, which become really interesting opportunities in situations like this. Like you can buy, let's see here, you can buy the 32-day 18 strike straddle for roughly 225. And so if we just look at that chart, how hard is it to imagine a move over the next month of more than $2.25? I think it's pretty easy to imagine that. We were below, we moved that far in the last 5 days. So these could be some really excellent volatility plays when we're talking about it from the options perspective.
Sounds
I agree
good.
with that.
Yeah.
But they are short-term extended. The time to look at these for option plays might be on that first pullback near that gap or near that red line at 16.5, 17 zone. Down there, I think they're much more attractive. And then when the stock gets back down, and if, for example, here, if this got down to 16.5 3/4, which option would you be buying?
Well, I mean, the play that I was talking about is literally just buying a straddle now, in case we get that follow through to the upside or pull back. But I mean, if we start looking at it at the 16.5 level, so that then it becomes a little bit of a different scenario. Then we're back down below the 200-day average. We have already filled the gap. I would kind of want to see the relative price of the options then, the implied volatility. But I mean, then I might literally just be looking for some follow through to the downside and only buy one option instead of two, buy the puts, if I can still get them at a cheap level.
Okay, thanks.
Yeah. One last thing is there's a lot of talk over there in China with reopening potential in Q1. And obviously, if we're going to reopen in Q1 sometime, people are going to front run. FXI and KWeb, anything going on with any of that?
I actually like CWeb.
Yeah, KWEB.
I like CWEB
Oh,
better.
CWEB, you like that better? Yeah, of course you got more leverage.
And YINN, yin, which is a triple. So, I mean, it's up. Look, I'm a speculator. I'm a trader. I'm a technical analyst. So I want as much leverage as I can get without having.
I'm with you. This is called risk capital, right?
Right, but without having to go on margin. You could. This is like buying on margin. Only you're not.
Yeah, without margin call.
Yeah, there you go. Exactly. So, but the point being is, and let's do KWeb for a minute. They're all the same. They look.
Yeah. No, they're going to follow.
The problem is that, in my opinion, is that they've come up quite a bit. And they've actually broken out. If you take a look, this double top.
This is a double combo going. It's got the dollar rolling over, and maybe these guys are let out of their apartments. So both of those are very positives, right?
Except for today, I just saw something about they reported the most coronavirus cases ever.
Yeah, no, it's not going to happen tonight, but it could happen in Q1.
Yeah, that's true.
Or Q2. And, if you're this is not for day trading. If you were a longer term holder, the question is, are we done with the downside here? And if we're done with the downside, is there any upside? Well, look at those graphs. It'll speak for itself.
Yeah, I agree with that. The second latter.
And then what about this? This is one that I threw away, and I hope it turns into DIY. I picked up at $1.50. What the heck, right?
Yeah, I mean, that was a good
I
trade.
mean, down at $1.50, it didn't seem like a bad deal. And this is ride sharing. I got to figure 6 billion people, somebody's going to need a ride when they get out of their apartment, right?
If you're going to trade on fundamentals, yeah. I agree with that. With that, who was it? Who used to the big fund manager? They used to like listen to what his wife was talking about in terms of what's popular, and then buy the stock. He made a fortune. The guy from Fidelity.
Oh yeah, the Peter Lynch.
Right, Lynch used to say, "I always talk to my wife. What's popular?" And then looked at what company was making it and bought the stock and made a fortune.
Well, the poster child of that is Lululemon.
Yeah. Oh. Well, based on how much my two daughters spend there, it's probably going to be $1,000 stock.
No, exactly. I mean, my son's buddy works there, and it's just it's a fashion statement, I guess.
Yeah, and it looks to me like if you take a look at this pattern, it broke its declining top sign. It broke out of its base. My targets would be on this one about 4,405 and then 440.
What are you thinking of Palantir? It's an intriguing stock to me because, they deal in data, and, the government's going to want all that data, and they got a lot of government contracts. I mean, is this something that's going to explode back to the upside, do you think?
I was amazed when I saw the stock have an inverse head and shoulders here and break out. And John, what's the name of those two twin brothers that trade options? I forgot.
The Nigerians. What happened to them?
Right.
They were like nowhere to be found.
They were touting this stock like you wouldn't believe it, 29.
Yeah.
And like many other tech.
But I haven't seen them on CNBC in months, and I don't know.
Yeah, there you go. Exactly. Anyway, so the bottom line is it's a wide base pattern. I like that. I wouldn't touch it with a 10-foot pole until I see a couple things. Number one, I always tell my people there's plenty of time to buy a stock after it gives you what you need. Don't anticipate. When you anticipate, I've gotten burned more anticipating a move than anything else that I've learned. Never anticipate a move. Wait for that market to, basically come to Papa. Over 9,905 is where I get aggressive with volume. If I see that it breaks that resistance zone, it's probably going 11, 13, and 14 or 15. But for now, at 817, what's to prevent it from just drifting lower again or retesting and going down? I don't think that's the stock I'd buy now. There's so many great looking charts.
Well, yeah, I know. And one of the things that you always point out that I really look at very hard is that where a market makes a run, then it has a pullback, doesn't take out the low,
Right.
and then that next move up is going to be the killer. And do you have any charts that kind of are in that kind of
Uh,
setup? Because that's
I
one of
think
your.
Dan had something he wanted to say about Palantir.
Oh, Dan, yeah, what do you got?
Oh yeah, I just kind of wanted to jump in on what Harry's talking about. Like, I agree. I don't think this is something that I would, want to actually buy the shares or buy calls in or anything like that. But this is one of those where we've got a really nice sort of bottom form there, a little bit lower. We've got some solid support at 7. And like those setups create really, really nice opportunities for put credit spreads. And
Oh,
look,
yeah.
yeah. And look, Palantir is not a stock that's going away anytime soon. And that's another one, again, I'm not a super big fundamental guy, but that one's really married in with fundamentals because Peter Thiel is very tied into, the Republican Party. And so the more, if we see Trump announce or something like that, we can get a bump in that. I just think that there's a lot of technical and fundamental protection to the downside. And man, put credit spreads can be
Yeah,
really, really
when you're
solid.
doing your search, Dan, you're kind of looking for things that have a pretty darn good floor. And when you have a pretty darn good floor that you could live with, then you can sell your put spreads with some kind of confidence.
Yeah.
Because
And
your worst case or whatever, if you ever got put it or whatever, at least you feel like you have a floor underneath it, technically.
yeah, exactly. And a stock like this, I would be totally fine getting put the stock to at the $7 level. Other stocks, I might just choose to sort of roll down, do an adjustment and, try and negate the loss. But this one's a no-brainer.
Yeah. Is there any other stocks that you're kind of looking at that might fit that bill?
Oh, yeah. Let's take a look here. As far as some put credit spreads. Oh,
Yeah.
I don't have my scanner open, but one that I had on here, where did it go here?
Do you want to look up and make a little bit of a handful of them that you're looking at? And then I'll go over to Harry here and he can give us some of what he's looking at on setups that he thinks look very good.
Yeah. Let me pull up my scanner here.
Yeah, I'll give you a minute or two to do that. Harry, let's go through some of the things that look pretty intriguing to you and that's been pretty popular in the chat room.
Yeah, I mean, I'm going to show you some of my swing trade picks. But more importantly, we just discussed the fact that so many stocks have turned around with big volume and broken out. Here's an example. Ring Central, which is a very, very popular stock. And look at this move it made from 21 to 400. A 20-fold move over, maybe 3 or 4 years. And then it topped, came down, at which point I told my people, this is actually, when I saw that little bear flag there underneath the moving averages, I said it's maybe a short at 300. It went down to 30. But take a look at it now. Last week's big explosive breakaway gap went through 2 moving averages and then went through the third before pulling back after tagging the declining top line. So what I'd like to see some backing and filling, but a hold ideally around 36.7. And then an explosive move into the 40s and 50s. Here's a stock that I think is about to go crazy. And I'm very close to this company. They're called Origin Agritech. They are working with the Chinese government for genetically modified seeds. Now we know there's 1 billion for people in China that need to be fed. They have already shown the Chinese government that their genetically modified seeds can be 8, 10, 15 times more crop growth. And so this is something that I'm watching because it's got a massive 1-year inverse head and shoulder type pattern. Watch what this stock did back here when it ran, just on the rumors. It went from 2 3/4 in a year to 28, 10-fold, 12-fold increase. I think you're going to see a much bigger move than this on this one this time. I'm hearing numbers like $40, $50 a share or maybe more. But more importantly, keep an eye on it. If it should pop above, and I would wait or nibble here with a stop loss. But if this gets over 12 1/4, I think it goes vertical, and I mean quickly. And by the way, there's only 4 million shares floating in the public hands, so could be one of those thin stocks. So if you're going to trade it, be forewarned that it's a thin stock and it could be very volatile. But from the standpoint of some of and that's the swing trade as well, for those reasons alone, technically, but fundamentally, there's a lot going on there. Here's a little interesting company. One of my institutional clients, who's one of the best stock pickers I know, gave me this stock in 2020 at 6 3/4 when it was first moving off the low. And the darn thing went to 41. It then rolled over, formed the base, broke out, and had this long consolidation. I said to my traders, if it breaks out here, I'm putting a swing on it. Look at the breakaway gap at 4. From 4, it went vertical to 544. I think you're going to see 6, 8, and more. This is a mattress manufacturer that apparently very popular. More importantly, though, technically, it's formed a little bit of an inverse head and shoulder base, broke the neckline, and it looks to me like it could go a lot higher. I have here's a stock. I love the fundamentals and the technicals on Perion. Now, Perion was from the same source, a pick for us at 5 3/4 right in here when it broke out. It went to eventually 30, 31. Take a look at how this fared during the bear market. It went sideways and consolidated for a year. Now it's breaking out again. Last quarter's fundamentals were fantastic. Keep an eye on Perion over 26 3/4. I'm looking for 32, and then the Katie bar the door, the sky's the limit on this one. I think it has big potential on a long-term basis to be somewhere in the 40s. So that could be a double from here. I like this little junior semiconductor company called SkyT. I like the way it came out of this little base pattern with a breakaway gap. The moving averages crossed over. Now it's pulled back and flagged. Keep an eye on this one. It's a $10 stock. I think you're going to see 16 and 20 going forward, provided we have a market that cooperates, right? And then lastly, ZYME coming out of a base pattern, a long one, sticking its head out here. And this is a biotech stock that I think it'd be 10 and 14 in the next weeks and months. $8 stock.
Now, the stuff you're looking at on the left here, I see you have the symbol, the price, the net change, the volume percent change. Any on the volume percent change, like TBLT's up 44%, and
but check this out. That's a percent change.
Yeah.
This is what the volume buzz is? Ever hear of volume buzz?
No, not exactly.
TC 2000 has come up with an indicator that shows at any one time, any moment of the day, what the volume is as a percent of the volume of the last 100 days. And in the case of PDSB, for example, number 2 here, it's up $1.32, 23%, but the volume buzz, 10,700% more volume than average at that time of the day as an average over the last 100 days. It shows to me that PDSB has got some power volume coming in to look at what it did today. Now, I told my people last week, this has a perfect double bottom. And I like the fact that it's 5 months apart after a big decline and a beautiful 1, 2, 3, 4, 5 wave move. And then it actually had a little higher high. But for me, this is a stock with a major breakout today. Take a look at this spike and look at the 1 minute chart intraday. It exploded and pulled back. At this point, to me, I think it's a swing trade here because you had a pop to almost 8 and you pull back in the 695 area. Actually, it pulled back to 640. It's already moved up, back up near 7 again. And I think that on a swing trade basis, you had a massive breakout. That's why when I see massive breakouts with volume like that, it's the second biggest volume ever traded in the stock, maybe third. Yeah. So it's the kind of stock that in the last couple of years, one of the biggest volumes that ever traded, and it traded on a breakout day. When I see that, I look for resistance. What's your next target? In my opinion, it's up here. Across these lows, around 9-10 zone. Let's call it $10. So if you're trading and you're looking for a pullback near 6.5, 7, and you get a nice move to $10, that's an excellent swing trade.
Now, this volume buzz, does it have a tendency to continue green, or is it a situation sometimes where that volume buzz will go from green to red the next day pretty quickly? I mean, is it a very volatile thing?
Yeah, because what it is, if this shows the percent. All it does is show the percentage of volume over above the average of the last 100 days. So for me, if PDSB the next day is only plus 1,000 or 500, it's still a very positive reading. This is a monster reading. When you see 10, 20, 30, look at STSA above it. It's 68-cent stock. So
are these heavily shorted stocks, and they could just be a pretty big short covering rally, or is that not a factor? Or?
It's possible, but when you see, let it be a short covering rally, I don't care what it is. When you break out of a base like that, it's a beautifully formed base.
Yeah, yeah.
You do it with volume like that. then it's likely this is the beginning of a move, not the end of a move. Although short term, it's extended and may need to consolidate like it did here. You know, anytime a stock has a big spike up, you can get even as much as a month or two of consolidation. But it's healthy because what it does is it fortifies the pattern and sets it up for the next leg up.
It's
And
confirming the pattern.
Yeah.
So you put more weight on the buzz or more weight on the percent change, or it's just part of the soup?
The percent change is fine, but if it's a low price stock, this percent change, you know, like look at PDSB, it's a $6 stock, 23% is a lot easier on a $6 stock than it is on a $50 stock. That's why I like lower price stocks. I like the leverage of stock. If you get the right pattern and you get a stock that's $6, $8, $10, $15 a share, you can buy, you know, a chunk and then sell it. And the other philosophy I have is never sell everything all at once and never buy it all at once.
Right.
Because the tendency is you made a decision, you go with it. And then invariably I get from my people in my room, I wish I would have held on to at least part of it. Well, why not sell?
Yeah, exactly.
Third? I have.
The
Yeah.
all or none mentality is a flawed one.
And all you got to do is once you sell a piece of it, then you put a stop. For example, in this case, I would stop under the bar right there. It's 550. Now you realize 685 is a long way to go. So you go to a 15-minute chart and you see where the support really is. It's about 575. The moving average is around 6. Now again, these are 15-minute charts.
Yeah.
Some people would say I would stop it below the pattern. So you could stop half under 635, the rest under 5 3/4. And if it goes, and this does look like a bullish wedge, doesn't it? It explodes, you're going to see 8, 9, 9 3/4 of my targets on something like that.
And the volume on these stocks over 1 million generally?
The ones I trade, I mean, if you know, everything's relative. If you have a stock that was trading, averaging 50,000 shares a day, and it's trading 400,000, you know, that's still 8 times the average. But a stock that trades 400,000, the next day trades 450,000, that doesn't, you know, impress me. I want a stock with 400,000 average a day to trade 5 to 10 times that. I want to see 1 million, 1.5 million trading as early as the first hour.
And in the chat room, you guys talk about this quite a bit.
I don't talk about volume buzz as much, although I pointed out when I'm recommending a day trade. Yeah. I don't follow it intricately. I follow the price pattern and I follow the underlying technicals, like, you know, moving averages and trend lines and things of that nature. For example,
I got you.
just in this case, I'm looking at a 1-minute chart and I see the 21 and 50-day moving average, 21 and 50 period moving averages right around 6 3/4. So my stop is going to be under there. And the breakout point would be there, and the declining top line above 7702 with volume. I'm going long for
Yeah,
for a
then it
trade.
goes. Hey, Dan, I'm going to swing over to you. I'm going to ask you to hold on to your picks and give them to the people when they contact you so you can go through them in greater detail because we're kind of tight on time. How do people get a hold of you, Dan? And again, name some of the stuff they're going to get when they call.
Yeah, you can get a hold of us. In fact, as a matter of fact, you can grab an ebook all on credit spreads, which is one of the things I love to talk about, love to trade, by just simply going to markettaker.com/claim, CLAIM. And that's what I'm going to be talking about when I do my training here in just a couple of days. So I'd love to talk about that.
Okay, sounds great. And there's the contact information. Markettaker.com is the website.
Yeah, markettaker.com, and then the ebook is markettaker.com/claim.
Perfect. Okay, and we'll be hearing from you later in the week during this week of broadcast. Harry, again, you know, a lot of stuff you've got there with the chat room and all these technical indicators, and of course your experience and your relationship with Avi. So you bring a lot to the table. How do people get a hold of you?
Well, I think you can see my website in front of you.
Let's see.
Are you trying to share your screen with us?
Okay, hang on.
No, we're still seeing your chart.
No, we're still seeing the charts. Yeah.
Okay, there it is.
Okay, you see it now?
Yep.
Okay, so if you go, let's just start a free trial. You'll get 10-day free trial, no credit card. Just sign in, come into the room, enjoy the fun and the money that you may make. And most people tell me in the first week to 10 days that they're in my trial for free. They make enough money to pay for a year or two of my membership. So yeah, come join us and take a look at what we're doing. And I think you'll, you know, find it really intriguing and and you'll stop chasing stocks and you'll start to do smart things technically.
And that's thetechtrader.com. So make sure everybody writes that one down.
Right. So that's it. And that's me there. Hi, everybody.
All right. And as far as optionprofessor.com, we have that ebook on how to hedge against market declines, but also how to hedge against upside surprises. So if you'd like to get that PDF report, just go to option, professor.com, put your email in and we'll send that out to you. Okay, that's all we have time for right now. Dan, thanks a lot for being here, and make sure everybody do take advantage of getting in contact with Dan and getting his information. And Harry, of course, always a pleasure, and look forward for people to go into that chat room and start taking advantage of some of your technical information like volume, buzz, and percent change and everything else. So
great.
thanks for being here, you guys.
And thanks for inviting me, and look forward to talking to you guys again. Bye-bye.
Okay,
Yep, thanks for
back to you,
having me.
David.
All right, thanks guys. Yeah, so if you're listening to this and you're new to Timing Research, this is actually a special episode of the Crowd Forecast News show that we do every Monday to kick off the Friendsgiving event. So if you enjoyed today's discussion, be sure to join us every Monday at 1 p.m. Eastern time. And we do this as a weekly panel discussion. But and just want to thank my guests again for today. Dan Passarelli of MarketTaker.com and Harry Boxer of TheTechTrader.com and the Option Professor of OptionProfessor.com. Thank you for moderating, and then we'll be back in just a couple of minutes here, starting the kickoff of the presentations for today, and the Option Professor will be next. So, thanks everyone.
Thanks, David.